Good morning and happy Monday to you. You're watching All You Need to Know on BloombergQuint Live. I'm Alex Matthew. First, the headlines. Yes Bank reports a loss of 600 crore rupees in the second quarter. Asset quality deteriorates and the management expects credit costs to be higher than earlier projected. IndusInd Bank has named Sumant Katpalia as the new MD and CEO of the private lender. He will succeed Romesh Sobti, who will retire in March 2020. Saudi Arabia has begun the process of what could be the world's largest initial public offer. The prospectus for the issue will be released on the 9th of November, while shares are likely to start trading in Riyadh in December. HDFC will be the only Nifty company to report its earnings today. And Asian markets begin the new week on a positive note, post a record close on Wall Street on Friday. Japanese markets are shut today due to a holiday. All right, now Friday was a record-breaking day for U.S. benchmark indices. The S&P 500 and the Nasdaq surged to fresh record highs after stronger-than-expected jobs data, which overshadowed a contraction in the manufacturing sector in October. Ranita Young of Bloomberg News wraps up Friday's trading action in this report.
U.S. markets ended higher on Friday, and the S&P 500 touched another all-time high during the intraday, all on positive job signals from the month of October. Investors are boosting their confidence in the world's largest economy. Now, the U.S. payrolls did climb 128,000 as the jobless rate edged a little bit lower, offering hope that the labor market can propel consumers to keep spending despite weakness and trade concerns. Safe havens like gold and treasuries were a little bit lower on the day, and investors seem to shrug off the U.S. factory gauge that signaled contraction for the third straight month. Meanwhile, Google said it would buy Fitbit for $2.1 billion to boost its hardware business, and earnings came in for ExxonMobil and Chevron, which had solid results. Alibaba also had great results and rose after the fact. And next up will be Berkshire Hathaway, and next week will be Uber and Sprint. And that's a look at your Wall Street action on Friday. In New York, I'm Ranita Young for Bloomberg News.
All right, let's also take a look at the Asia-Pacific region. Rosalind Chin is joining us live from the Hong Kong studios. Good morning, Rosalind. Japanese markets are shut today, but the rest are open, and some of them just coming online as of now. Some positivity over the weekend, some murmurs of the trade deal going the right way.
Absolutely, indeed. We've got a lot of positivity feeding in here to Asia. As you say, the Japanese markets are down, but looking at the MSCI Asia Pacific ex-Japan, that is making gains of 0.7% right now. And largely, we are seeing that China has said that it's received a consensus in principle with the US, and that, of course, is helping China play catch-up, because the announcements about the trade deal progress being made on the trade deal came after the markets closed on Friday. So right now we see the Shanghai Composite and the CSI 300 index playing catch up. The Shanghai Composite up by 0.46%, the CSI index up by more than 0.5%, and Hong Kong's Hang Seng index also making gains of about almost 1% right now. Now, we do, of course, have President Trump saying that he preferred to have the trade deal signed in the US, although, of course, there has been no response from China, as far as we know, on where this trade deal will be signed. Wilbur Ross, the Commerce Secretary for the U.S., spoke to Bloomberg over the weekend, and he did say that he's optimistic that a phase one deal could be reached in the month of November, but a date for a specific signing could slip a little bit, let alone, of course, a location for it. We've got the Kospi index, so that is making gains of 1.24% right now. Samsung, of course, one of the biggest stocks there, are leading the gains. In Australia, the materials sector is really continuing to boost the S&P ASX 200, that is making gains of 0.5% right now, but financial sector really is not performing that well today in Australia. We saw some earnings from Westpac which were worse than expected, the worst earnings, in fact, since the global financial crisis. The CEO, Brian Hartzer, said, in fact, himself, 2019 has been a disappointing year. Now, Westpac its shares itself has been halted due to an announcement from the bank on plans to raise about $1.7 billion in new capital through a share sale. But the impact did reverberate to other financials in Australia, which which are listed. For example, ANZ, NAB, CBA, those all are trading lower today. NAB is down by nearly 3%. Commonwealth Bank is down by just over 1% right now. And staying with Australia, we of course know that the RBA will be holding its policy meeting for November on Tuesday. It's expected to hold, though, because it's cut 3 times since June. We're also looking ahead to central bank meetings in Thailand and Malaysia over the coming days as well. Back to you.
Thanks so much for that, Rosalind. Now, a lot of the positivity that's feeding into Asian markets, as Rosalind told you, is to do with the trade talks between the US and China. A major issue for central banks across the globe is, in fact, what happens to the US-China trade deal. US Commerce Secretary Wilbur Ross spoke exclusively to Bloomberg Television on the prospects of a Phase 1 trade deal. Here's what he had to say.
There was a suggestion about Alaska. There was a suggestion about Hawaii. I'm sure the Chinese will have some suggestions in China. That should be the easiest part of the whole thing to negotiate.
But the trade deal will be signed in November.
Well, you say it wonderfully definitively, and I wish I could be as definitive. I think we're in good shape. We're making good progress, and there's no natural reason why it couldn't be. But whether it will slip a little bit, who knows? It's always possible.
Are there still obstacles?
Not so much obstacles, but making sure that each side has a very correct and clear, detailed understanding of what each side has agreed to. Trade deals are very, very complicated, and this one is particularly complicated.
Secretary Ross, it's been 5 months since the Huawei ban. Some American companies are still confused as whether or not they can deal with Huawei, do business with Huawei. Given the progress made through the Phase 1 trade deal, is there a possibility that Huawei could be removed from the entity list, or whether restrictions can be eased?
Well, first of all, Huawei is an enforcement action. Huawei is not a part of the trade negotiations. Second, there have been some 260 requests filed for licenses. The way the entity list works is you need a license to sell any controlled product to them. That's a lot of applications. It's frankly more than we would have thought. But remember, too, with entity lists, there's a presumption of denial. So the safe thing for these companies would be to assume denial, even though we will obviously approve quite a few of them.
Now, the world's most profitable company, Saudi Aramco, has kickstarted its IPO process almost 3 years after the idea was first proposed by Saudi Crown Prince Mohammed bin Salman. Valuations for Aramco are yet to be determined as global investors remain skeptical of the proposed $2 trillion valuation. James Thornhill of Bloomberg News reports with more details.
Firstly, that Saudi Arabia's initial valuation above around $2 trillion was a little bit too high, and most of the Wall Street banks that we've obtained these details from, their valuation is somewhat below that. And in fact, as you were saying, the Saudis' decision to pull the trigger on that IPO was based, if you believe the sources, that on an acceptance that they won't get that $2 trillion, that they're more likely to accept 1.6 to 1.8 sort of range, and that's yet to be seen because we haven't really seen the details from what Riyadh is actually hoping for from this IPO, but certainly that's the indication. And of course, the other thing it shows is that, as you were saying, that the huge valuation ranges. I think the Goldman's one, the range was around $1 trillion, which is more than the market cap of some large oil companies. So it shows you that they're really struggling to pinpoint an exact value on this Saudi Aramco company.
Some were saying that even if it wasn't for the price, that it's not really immediately enticing when it comes to Saudi Aramco, just because of these investors now wanting to add more oil shares. So how much of the problems that the company faces are more macro and more structural?
Well, I mean, I think this speaks to the difficulty that banks are having in valuing the company, because you just don't know what's around the corner in terms of shocks to the oil price. And of course, the company is so sensitive. I mean, it's obviously fundamental to the valuation. And when you've got the price moving around so much, it becomes very difficult to pinpoint a value. So of course, we had those drone strikes in September, which had massive ructions in the crude market, which is what some people say derailed the IPO that was initially planned for earlier in the year. Now we're moving ahead to December, and they'll be hoping, presumably, for some price stability in that. And the fact that they're going ahead suggests they are reasonably constructive on the outlook for prices. But who knows what's around the corner in terms of geopolitics? That region remains incredibly volatile. Iran's an uncertain player. We don't know if they might ratchet up tensions, or the US as well. So it just underlines the difficulty for the Saudis in getting top dollar for this IPO.
Yeah, and another factor that could affect demand would be whether or not the US-China trade deal pans out the way it's meant to. Now, apart from that, there was another factor that led to positivity in the US markets on Friday, and that was the jobs data. Top Fed officials are asserting the view that interest rates are now on hold after another unexpectedly strong jobs data in the month of October. Kathleen Hayes is here with the latest.
Monetary policy is in a good place. And remember, Rich Clarida, the vice chair of the Federal Reserve, you know he is going to be in step with Chair Jay Powell. You know when he speaks, as he did to Bloomberg Television, to the Japan Society, to another group later in the day, he was all over the map on Friday, but he certainly had the same message, and that was being upbeat after a stronger than forecast jobs report. Let's listen.
We have ongoing growth in the economy. We have inflation near our objective. So the economy is in a very good place. You know, growth is, as we've characterized growth as moderate right now. The global economy has been slowing, and that's a factor. But the U.S. economy is very resilient, and these are good numbers. Both the GDP number and the labor market number surprised a bit on the upside.
From Rich Clarida to the Bloomberg Library to look at a chart, these turquoise bars, keep your eyes right here, because this is what the Federal Reserve is watching so closely. This is the most important monthly report. It's the most coincident. It is also the most leading indicator in some ways. And what we got in the latest month, October, 128,000 jobs. That's even with 46,000 jobs lost to the GM strike. And it was versus 85,000 forecast. But this bar right here, you guys, up 180,000, a gigantic upward reduction of about 80,000 workers in the previous month's reports. It wasn't just that October was stronger than forecast. It was because the previous month showed, hey, things were actually doing better in the labor market than we thought, making the Fed's call on the pause look pretty good. And in fact, Clarida did say, acknowledging, look, we're going to be data dependent. Every meeting's going to be live. But a lot of other Fed speakers, Randy Quarles, he's the vice chair for supervision, the expert in banks. The cut puts the economy in a good place. John Williams, New York Fed president, jobs growth is strong. Mary Daly, San Francisco Fed. Policy is accommodative now with these three cuts. That's good. There are some risks, global risks that remain. Rob Kaplan, Dallas Fed. The cuts bring policy to an appropriate level. We should be patient now. 8 more Fed officials speaking this week. I expect they're all going to sing from the same book.
All right, let's wait and see what songs emerge. Meanwhile, let's have a look at what's making headlines across the globe. Sue Keenan of Bloomberg News brings us the first word headlines.
Well, at least 200 people were arrested in Hong Kong this weekend as pro-democracy protesters clashed with police once again. On Saturday, police fired tear gas and deployed water cannons on demonstrators who had built barricades across the streets. More unrest broke out again on Sunday when police and protesters clashed at shopping malls, and a pro-democracy district councilor was attacked. To the valuation question on Saudi Aramco, the oil company may be worth $1.5 trillion or even less than that, according to research sent to potential investors by the banks now involved in the company's long-awaited IPO. Now, that valuation is well below the $2 trillion target initially set by the kingdom. It suggests a struggle to pinpoint a precise value. Aramco says it'll list on the Tadawul exchange in Riyadh and likely start trading next month.
It is very safe, and if you want to have a full proof to that, you see the oil prices. Oil prices went up the first 2 days by about 20%. Then it came down by 10%. And all the future traders saw this as a non-event. This is we have 1/8 of the oil production in the world. And the oil traders, they saw this as a non-event, and that means it is really safe. That's what the money is saying.
Now to the European Central Bank. It officially enters the Lagarde era later Monday when the new president makes her first policy or public policy address. Christine Lagarde will speak in Berlin at a time when ECB policymakers are split over stimulus plans, with the Eurozone economy teetering on the brink of recession. Analysts expect her to call on governments to do more to boost demand and to lift growth and low inflation. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
All right. Well, with that, let's turn to the Indian markets. And Agam Vakil is here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Agam, your vacation was good, I hope. The Indian market certainly had a good time while you were away. It hit record highs.
Yes, absolutely. And well, it's always a pleasure to know that even if you're not away, even if you're away, you see the market's doing well. But of course, we're looking at a little bit of continuation. For now, at the SGX Nifty, indicating a positive start, currently just a mark below the 12,000 level. But let's talk about how things have panned out, and especially over the weekend. We did see the Nifty make marginal up moves. There was a little more of an up move for the broader market indices, the small cap index specifically. To talk about the banking indices too, we are looking at gains, strong gains too. Of course, the Yes Bank will be in focus because of its earnings, and IndusInd Bank with a new head coming through. So we'll be watching out for the Nifty banking index here. But as far as your ADRs are concerned, we're seeing a lot of strength in Vedanta. ICICI Bank, Tata Motors, HDFC Bank, all of them advancing in trade. Of course, we've had a good run for some of these names. Save for Infosys and Wipro, which are showing some marginal weakness. Dr. Reddy's advancing. Moving on, let's also talk about your fund flows. FIs continue to buy at 533 odd crores on a net basis. DI is selling to the tune of 136 crores. I reckon it wasn't a very large day when it came to gross numbers either. But let's move on and talk about your contributors. On Friday, HDFC Bank, IndusInd Bank, ITC, all of them advancing to a certain extent, being cancelled out by TCS. TCS had a sharp drop last Friday, along with L&T and Reliance Industries. But this is as far as the cash markets are concerned. What about futures and options? Well, we are looking at an accumulation of around 2% in futures, and the Nifty futures, that is. The Nifty banking futures, which is going to be important today, saw a 21% increase in open interest. Well, of course, it's still early days in the November series, that is the monthly expiry. But as far as your 28th November options, open interest options is concerned, we're looking at a 400-point range within 11,600 on the lower end and 12,000 on the higher end. And we are closer to the higher end. So wait and watch whether or not we actually see that extension and that the accumulation of calls move from 12,000 higher, considering we already are at nearly 12,000. Now, this is as far as change is concerned. We saw a lot of writing around 11,800, 11,900 on expected lines. Moving on, let's talk about the WIX, and that came off by around 3.4% to around 15.7, below the mark of 16. Well, reasonably comfortable right now. The Nifty put call ratio as well, that stayed at around 1.41 across all series. And finally, coming down to stocks, we had Bank of India, which was in focus. We have Just Dial, which did see a lot of weakness. Dish TV, on the other hand, did see a sharp up move in accumulation and open interest towards fresh longs. What about those stocks we saw unwinding? Again, keeping an eye on Bharti Infratel, Hexaware, and IndusInd Bank. And as I've suggested, we are watching out for IndusInd Bank and Yes Bank, Alex. And I reckon on the back of that, the banking index will be in focus.
Thanks so much for that, Agam. All right, let's turn to important news. Subhash Chandra and family are set to sell another tranche of their shareholding in Zee Entertainment. Mutual fund houses, which hold some of the stake as collateral, will transfer the encumbered shares into an escrow account. Yatin Mota is joining us on the phone line to tell us why such a move is warranted. Yatin, what are the details that you're picking up as of now?
Good morning, Alex.
Morning.
First of all, if you look at Zee, we know that the promoter entities are leveraged, and earlier also they had sold close to 10% of their shareholding to Oppenheimer Fund. Now we gather from reliable sources is that the promoters have been able to convince the lenders in order to transfer the encumbered shares or the pledged shares into an escrow account. This escrow account will probably facilitate the sale of the promoter shares to a potential buyer. We already are being told by the sources that the promoters have been negotiating with some potential buyers, in order to have a stake sale moving, and the escrow account purely facilitates the transaction rather than the buyer or the seller going to each and every lender and asking for shares. The escrow account basically means that the shares are in, and once the payout happens, really the shares are transferred to the potential buyer. At this point in time, what we gather that mutual funds, which hold close to 5.5% of promoters' equity, have transferred their shares, apart from other lenders, including banks, also showing the willingness to transfer the shares in the escrow account. And clearly, this means that now the promoters are readying themselves, to sell the stake to a potential buyer via this escrow account mechanism. Remember, earlier the management said that the total debt at the promoter level is close to 7,000 crores, of which 5,000 crores is coming in from the domestic investors, and in order to repay them, this escrow account is facilitated. Given the fact that the non-media business, including solar projects as well as road projects, have failed to attract any buyer at this point in time, so probably the promoters have now decided to monetize their balance stake in Zee Entertainment.
Thanks so much for bringing us that, Yatin, and we'll stay with the story till we have more clarity as to what is going on with that stake sale. Let's move on to earnings now. Lower coal prices and other input costs helped JSW Energy report an operationally strong performance in the second quarter. Sharad Dubey caught up with the Joint Managing Director Prashant Jain and asked him about the company's performance as well as its plans to purchase distressed power assets. Listen in.
We sold our short-term power quite well in advance, and we took real advantage of the falling fuel prices. The coal prices were down by 40% year on year, and our O&M costs was also down, and because of which our EBITDA was up by 5%. And while the industry was seeing kind of a contraction in the month of August and September, and then merchant prices were also subdued, our deemed PLF was up by 2%. It was 79% as compared to 77% year before. And our interest cost was also down, and which was down by 12%, because we have been prepaying our debt, and because of which our PBT was up by 23%.
So your various plants were there. So how was the main how was the operational results for the plants? Now if you take the main plants like your Bamer, your plants in Vijayanagar, so how these plants performed, if you could give us any idea?
All plants perform very well, and of course only the odd man out was Vijayanagar plant, where our PLF was lower. Otherwise, all our plants did very well, and where the deemed PLF was higher than what we budgeted and planned. And in case of our hydro asset, we saw ever highest since inception, the power generation. The PLF was 104% as compared to 93%, which was last year. And so the generation was very good.
Well, this quarter, a lot of important transactions happened. The first one being the Utkal transaction. So basically, we just want to know what's the current update like, and what kind of commissioning you can expect for both the plants for your Utkal.
It's a 700 megawatt power plant, 2 units of 350 megawatt. 1 unit was commissioned, another was under construction, and we have been selected as a successful bidder, and then it has been admitted to NCLT, and we expect the transaction will get consummated during the current financial year, and we are expecting it will take any time between 12 to 24 months time frame to put both the units into place. And this is one asset which is a low cost pithead power plant where 90% power is PPA tied up with a fuel supply linkage in place. So, and it's a low cost power for, and in the bottom quartile for the distribution company. So it's a good asset.
Well, apart from this, another distressed asset, we're talking about is the GMR's asset in Odisha. So, sir, we would like to know what's the current, update on that, and is the deal coming through in this FY20, or will we expect, this delay to continue?
We have entered into an exclusive discussion between along with the GMR Energy, and this is a 1050 megawatt power plant, which is 84% PPA tied up with fuel linkage, and we expect the transaction should go through in the current financial year. And there is quite a lot synergy between in Bharat Utkal as well as GMR Kamlanga, because both plants are nearby, and they will bring us a lot of operational savings.
Right, sticking with earnings, and this is one bank that all of you have been watching very closely, Yes Bank. It reported a 600 crore rupee loss in the second quarter, and while the loss was primarily on account of a one-time additional charge of 709 crore, the lender's asset quality deteriorated significantly on a sequential basis. Shefali Malik is joining me now to take you through the key details. Morning, Shefali. What stood out according to you?
Well, it was all about the asset quality in Yes Bank earnings and the fundraising commentary as well. So starting with the basic numbers, there was a loss of 600 crores versus about a profit of 965 in the same quarter last year. Net interest income, however, came in line with, at about 2185 crores. Now talking about the asset quality, which has been the main concern for the bank, their gross NPAs inched up to about 7.4% and net NPAs inched up to about 4.35% versus 2.91% on a sequential basis. The gross slippages, however, on the in absolute terms came in at about 5,945 crores. But aside of gross slippages, what happened with the sub-investment grade group, that was the key highlight of the quarter. Recoveries and upgrades were also almost half of what they did in the same quarter last year, so there wasn't much cushion coming in from that front as well. Credit cost for the quarter stood at about 69 basis points, again more than double of what they did in the first quarter. Other than that, operationally as well, the numbers were weak. Operating profit came in at about 1460 crores versus about 2366 in the same quarter last year, and the rate of income tax for them changed to about now 25% after the one-time adjustment that they've taken during the quarter. And because of the fundraising that they did during the quarter, their capital ratios have gone up. CET1 went up to 8.7% versus 8%. Margins too came off 10 basis points. But more importantly, it was a commentary by the management during the con call, during which they raised the credit cost guidance they doubled it basically to about 250 basis points versus 125 that they earlier had guided. And other than that, we got to know during the con call that the BB and below book has gone up to about 31,400 crores versus about 29,500, and the slippages from the investment grade book were also 2,100 crores. That is almost 40% of their gross slippages and 30% from the BB and below book. So the concerns continue as far as the asset quality is concerned for Yes Bank, and they also told analysts that the binding bid that they've got is from somebody who has the financial capability to execute the deal and has the backing of a large US-based investor.
All right. Of course, if our viewers want to take any more time looking at the details, that is available on the website. But Shefali, there's a big name in the financial space, HDFC, coming out with earnings today. What are the key highlights and expectations from that?
For HDFC, it's expected to be a good quarter this time around, with the net interest income expected to inch up by about 21% on a YOY basis to about 3190 crores, and profit is expected to go up by about 32% to about 3265 crores. And we can expect 16% loan growth to come in, mainly led by 17% individual segment loan book growth. And also during the quarter, they received dividend worth about 1,074 crores crores versus just about 6 crores. So that's primarily because during last year they got their dividend in the first quarter. This time they're getting it in the second quarter, and profit on sale of investment is also expected to almost double to about 1632 odd crores. However, they did have some exposure to RPL, and there will be some MTM loss that will come in this quarter worth about 270 odd crores. Here as well, we can expect some DTA impairment of about 275 crores, but nonetheless, the numbers are expected to be very good this time around for HDFC.
Thanks so much for that, Shefali. Of course, Shefali is going to be back when the numbers do come out to take you through the key highlights. But meanwhile, let's turn to the stocks that you have to watch out for in trade today. Somit Sarkar is joining me to tell you all about the stocks in news. Good morning, Somit. What's on your list?
Well, good morning, Alex. I'll start off with the earnings. JK Lakshmi Cement, the results were above estimate. The revenue gain was 10% despite a marginal fall in volumes. It was the lower power and depreciation costs which aided the margins of the company, while the management also cited softening of fuel prices and optimizing its product mix. V-Mart Retail, the revenue growth was 20%. The company reported a positive EBITDA in the second quarter due to Ind AS. However, the net loss of the company did widen due to higher finance and depreciation costs. Average bill size grew 13%, while the average selling price was up 16%. And lower discounted aided the gross margins of the company by nearly 200 basis points. Escorts reported a weak financials with revenues and operating profit falling compared to last year. The net profit was aided by lower tax expense and an exceptional loss of, however, an exceptional loss of 9 crore did impact the numbers. The agri machinery and construction division showed a degrowth, while the railway segment showed a growth compared to last year. BML now reported a weak set of numbers with drop in revenues and also reported a loss. Higher raw material costs dented the operating performance of the company in the second quarter of financial year 2020. In other stocks to watch, firstly, the auto sales number. Hero Motor, where October sales were down nearly 19% to close to 6 lakh units, while the Tata Motors October domestic sales were down nearly 32% to close to 39,152 units. On the operational performance, Coal India reported its October numbers, where the coal production was down nearly 21%, while the offtake, that is the sales, were down nearly 19% compared to last year. Ashok Leyland, where the company said that they will observe non-working days ranging from 0 to 12 days during the month of November. Now, do remember that the company has been shutting off their plants for the last couple of months, and this is again what the company has done, and again this is what the company has announced for the month of November. And lastly, Indiabulls Real Estate, where they sold a London property to the promoters for nearly £200 million.
Thanks so much for that, Somit. All right, now several stories you'll find on the website BloombergQuint.com, some of which we've already spoken about. Let me take you through a couple more. First up, in news on telecom, Minister Ravi Shankar Prasad has directed BSNL and MTNL to implement VRS guidelines quickly and initiate proactive measures to monetize assets in a time-bound manner, while also making it clear that they need to become more aggressive in the telecom market. That's a PTI report. In the auto space, Maruti Suzuki India remains cautiously optimistic over sales prospects going ahead, as many of the challenges that led to the slowdown in the auto industry still exist, according to a senior company official. The company, which posted growth in domestic passenger vehicle sales after 7 months in October, said it would take at least a few more months to get clarity on whether or not the industry is finally starting to recover. That's all you need to know going to trade today, but do stay tuned. There's a lot more coming up in just a short while. This is Bloomberg Quint.
So people